morning, everybody. It's the top of the hour, 11 o'clock Central. You're in the right spot if you want to talk laundromats. This is CLA's monthly webinar on how to start a laundromat. I see lots of you joining in with the chat and saying hello and where you're from. That's cool. We've got Andrew from our team, Catherine from our team in the chat too, who will be helping us with welcoming you and sharing resources as we go along the way. And you can also see that we've got our special guest, Alaa, here. Good morning, or I should say good afternoon for you out in New Jersey, assuming
Yes.
that that's where you're at
Yes,
today.
I am. I'm in Jersey.
Good stuff. Well, we'll get to know Alaa here a bit better here in just a second. So as everybody comes on board, I'll start with a little bit of housekeeping. We've got a 90-minute session, which, believe it or not, goes by pretty fast. We've got some prepared material that we'd like to share, but we like to really center in on your questions and concerns about either buying or building your first laundromat. I'll mention that we are recording. I just double checked that we are recording, and so we'll make all of this available to you after the program, so you'll be able to take advantage of that. With respect to the Q&A, it's easiest for me if you use the question and answer box, but obviously I'll keep an eye on the chat as well in order to make sure that we're tracking with you. So yeah, if everybody can hear and see, it looks like we're good to jump in. But as I'm looking in the chat, we've got Buffalo, New York, West Palm, Los Angeles, North Carolina, Boston, a couple Boston area people, Bristol, Virginia. That's very cool. I already shouted out to Carrie, who I met at a show on Saturday in Waltham, Mass. And so she's here to learn something, and she's actually going to be coming to our new investor workshop in person here in Oak Brook week after next. I'll talk about that a little bit more as we go. So, good. Hey, Northern New Jersey, Alaa. That's good. We got to see some of your neighbors on here.
Yes, I know. I see that.
Okay, well, that's enough good mornings and setups. But again, just repeating, we are recording. We really want to focus on your questions and answers. And let me go ahead and get started with just some basic orientation here. Who are we? What are we doing here? What's going on? So my name is Brian Wallace. I'm here as your host on behalf of CLA, which is the Laundromat Association. We've been doing this for a very long time as the nonprofit trade association servicing the laundromat industry. Like a lot of trade groups, we're really here as an advocate for the industry. And we do that in a lot of different ways, from education and events to things like advocacy on the legislative and regulatory front. We've got a number of business solutions and other resources that we make available to our members. And so it's really kind of a full service organization to help you get acclimated to the industry. And you might be asking, why are we doing this? Obviously, our members are primarily those that are already in the industry, like Alaa. But we really feel it's part of our mission to try to do our best to educate those of you that are aspiring first-time laundromat owners. You've got a lot of questions, you've got a lot on your mind. And honestly, we feel like the more that we can help you get educated, the better decisions you're going to make about getting into the industry, which is not only good for you in your investment in your life, but honestly, it's good for business, right? If we can help people find the right way to get into the business, it really helps the health of our industry overall. So we certainly want to take good care of you, but at the same time, this also really works well with what we're trying to do, as an industry. So beyond that, how are we going to get this information across to you today? Well, my role, as I said, is president and CEO of CLA. I've had the distinct honor of spending the last coming up on 34 years in the industry, getting to learn from thousands and thousands of existing store owners, certainly working with many thousands of you that are aspiring first-time laundromat owners. And I'll be the first to admit that I'm not an operator. I'm not like Alaa. I don't own stores or run stores. I'm more of an academic, and a cheerleader and an advocate for the industry. But I've had the great opportunity to crisscross this industry over the course of many decades and try to gather up and synthesize and share out sort of the best practices and the best information around the industry. So I'll do my best to share what I've learned with you today. But I'm super excited that we've got a special guest, Alaa El Banna. Here we have a very experienced, very progressive laundromat owner. And Alaa, first of all, welcome and thank you for doing this, giving up your personal time to join our group. But wonder if you might give us a little bit further introduction, a little bit about your history in the business and what you're up to today.
Sure, absolutely. Well, first, thank you, Brian, for it's allowing me to be here and participating in this, which is really, really important for the industry as well as the community. And I'm very honored to be part of it. I appreciate the invite for sure, and happy to be here with everyone else. And hopefully we can bring some really good information for you guys, and and get you to start your journey on the right foot.
Right, right.
As Brian mentioned, I am a store operator. I am a multi-store operator. I've had all of my stores in the state of New York and New Jersey. I've been in the industry. My first store was opened in 2003, so a little bit over 22 years now. In all, I've had a total of about 12 stores. I've sold some stores along the way, and now I'm down to 4 stores, which are all located in New Jersey. And I'm currently in the process of going through the paperwork and the permitting and plans and the very initial phases of opening up a 5th location also in the state of New Jersey.
Well, that timing couldn't be more perfect, Alaa. You're right in the thick of it right now, and we may have
Exactly.
some folks on the call here that will be looking to do that. So I'll keep that in mind as we go through some of the Q&A, since you're going through that process. And I think it might be interesting, Alaa, to so these 4 stores that you have currently, would you be able to kind of give everybody a little bit of a overview of kind of the mode of operation, 24-hour, regular hour, large, small, kind of what's your kind of model look like? Because obviously you've gone through a number of stores over time. And so how would you sort of describe your model fast forwarding to 2025 in this store that you have on deck?
Yeah, no, definitely. And I think it's a really great point to bring up, Brian, because when I started in the industry, my first store, like I said, was 2003. It was roughly about 1,500 square feet of space, and we had somewhere around 24 washers and probably about 26 pockets of dryers. And we learned the hard way that even though we were at full capacity, we just were never making enough money to even cover costs, to cover utilities and cover the cost of operation. But even though we were at full capacity, I mean, you walked into that store at any given point, it was always used. And so we learned the hard way that there's a sweet point. There's a certain, based on your area, your demographic, what the rent costs are, what the utility costs are. There's so many things that come into play. You have to really do the math. Machine and I'm sure we'll get into some of this as we go forward, but there's a lot of science and there's a lot of math that has to go into when you're building a new store, when you're deciding on a location, what happens. And so we ended up expanding that store. And then our journey began to become multi-store owners. And one thing that I will also tell you is that the journey never ends, right? So that journey
Always
started.
learning.
It never ends. You know,
Right.
and if you feel like you get to a point where you're like, okay, it's over, my journey's done, I've made it. It's not true. It never ends because everything around us changes, right? We can't control the external aspects that change us on a regular basis, and especially in our world today, it's such a rapid pace that your journey is going to be always ongoing.
Mhm.
And that's exactly what happened with me. I started to open up stores, and it was at that point, it was basically just whatever location I can get my hands on. So some of these stores were 2,000 square feet, 3,000 square feet. Some had parking, some had limited parking, some had no parking. And, they did well. And thank God I've never had a situation where I opened up a location that ended up being a bad location. But up and around 2015, I started to notice a trend. And this is what I mean by your journey never ends. I started to notice a trend. And one thing to note here, in 2015, something happened to me in the industry which helped my journey change course in a very dramatic way for the better. And that what happened during that time was I attended my first CLA conference.
Oh,
And from hearing some of the speeches, from just kind of having some casual talks at this conference, I realized that there was so much happening to this industry. Even then, there were so many changes
mhm.
happening, whether it was credit card processing, whether it was drops off service, whether it was different POS vendors coming in. I realized that there was a lot of changes. And because of that, that helped me kind of change my trajectory. And one of the big changes that we decided to do there is we wanted to kind of consolidate our stores and have really the we had to have like a certain criteria for our stores at that point. And the criteria was must be 5,000 square feet and above, must have X amount of parking spaces depending on the square footage, must be in a specific location, and everything else that was in our portfolio, we decided we were going to sell. And that's exactly what we did. And that started to happen and take place up and around 2018. And so now my portfolio consists of the 4 existing stores. The smallest one is 8,000 square feet. The largest one is 11,000 square feet. About 175 to 100 to 200 machines in each location between the four. So and that was kind of where we wanted to go as far as what we're focusing on from a location perspective.
Mm.
We also wanted to look at more of an aesthetic appeal. We started again through the various conferences and the speeches that we've attended and heard, and we started to notice that there's a big demand for making these locations comfortable, for making them appealing, whether it's aesthetically, physically, mentally. And so we also started to focus our brand on just that, where we
Right.
wanted people to walk in and have a familiar look and feel, right? So regardless of what location you're in, you had that same familiar feel, but also we wanted it to be comfortable and not too over the top and chic, to appeal to the new generation of people that are starting to do laundry and use laundromats. So that's where we are today.
Yeah.
And it's great. We love it.
Yeah, no, it's super helpful to lay out that journey and that path. And I do find that with longstanding multi-store owners, you start to zero in on, okay, this is what we do. This is our model. This is what we do best. And we'll talk about this some more. But for those of you looking at what he just had to say about 8,000 feet to 11,000 feet, just keep in mind that is much larger than the averages. And as we'll talk about some more, and I'll ask Alaa about this as we go, it really is driven by the demographics. And he's in some markets that are very densely populated, very strong demographics for the industry. And that's sort of dictating that larger size. And that's really a good walk-in for kind of getting into some of these facts and figures. And I'll just remind everybody that I've got my eye on the question and answer box. I also have my eye on the chat. It's a little bit easier for me if you use the question and answer, but go ahead, pop in your questions at any point, and I'll kind of keep an eye on it, and I'll share those questions with Alaa, and we'll make sure that we get everything answered. But let's sort of start with just the basics, just kind of set the table here. Who are we? Laundromat, 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 lavanderia, coin laundry, washateria, coin op laundry, coin laundry. We've got all these different names, but basically what we're talking about is a sort of a primarily self-service retail facility where people are coming to do the laundry. So when you talk about the vended laundry industry, you've got sort of this retail or store business, and then you've got the multifamily apartment, condo, dormitory, sort of setting. So we're not talking about that multifamily or multi-unit environment really strictly talking about the stores. And, about 29,000 stores in the US. That's at best as an estimate. It's very fragmented business, very difficult to put our hands on each and every location. And I'd say the same thing, when it comes to the sales volume. That's probably pretty conservative at 5 or 6 billion. It may be closer to 8 or 9 billion at this point. But again, these are independent operators like Alaa, and not always able to kind of capture all of that in aggregate. To the point of Alaa's outline of what he had done with the stores, and yes, William in the chat talks about different NAICS codes for the business. Absolutely, those industry class codes. If I could do anything, I would start from scratch and give them new designations to work with, and that is one of the challenges, William. So thanks for pointing that out. But the average store size, the statistical average, the mean, we do a benchmarking survey every year over the last 30 years, comes in at 2,850 square feet. That doesn't mean that's the size that you should build. That's not, this doesn't say that there's a bunch of stores that are exactly that size out there. That is the statistical average. And you might imagine that that average has continued to climb in recent years, a few hundred feet at a time, and is continuing to get larger and larger. And as Alaa pointed out, these can range from a very small store in maybe a rural area, or someplace that is just is limited on space, maybe 1,000 feet, but even 10,000, or in his case, 11,000 feet, you'll also see that. But it's primarily sort of driven by a combination of the determination of the market demand, the physical space that's available for build out, and obviously the expectation for the business being done there. So as you go into this, just understand you're going to see a lot of different sizes of locations, and things are trending a bit higher. Anything you would add to that, Alaa, in terms of store size?
No, I think those are all good points that you brought up, and I think that pretty much covers it as far as the size.
Okay, great. And Osita is in the Q&A box. Yes, we will share the video and the slides with everybody after the presentation. So appreciate you having that interest. So, and then this moving on with this basic tale of the tape, we've got most of our folks are leasing their locations. In other words, they're going into a commercial real estate environment. They're making a deal with the landlord for a long lease, which we'll talk about a little bit later on, and operating within those confines, and quite often as part of a strip center or shopping mall, something along those lines. I think a lot of our members would love to own the real estate. And I think that is sort of a goal or expectation that people will build over time. And it usually is a function of either the financial resources that are needed to acquire the real estate, or just having the real estate be available at all. So, both are perfectly acceptable and both are workable, and you'll see some combination out there, but most are definitely leasing their space. The last thing I have on this part of it is just kind of getting a reset on who are we here to serve and take care of. We have a growing group of laundromat clients out there that are seeing the aesthetic that Alaa is trying to do, the size, the convenience, the kind of the draw. You can imagine a store that size is sort of what I would call a destination laundromat, as opposed to a neighborhood laundromat. But at our very core, we are serving primarily a low income households. Typically, they're going to be renters by virtue of either not having access to their own washer dryer, or limited access in the apartment building, or can't afford a washer dryer. So those are sort of our folks. So it's just a matter of who needs to do laundry, and that's the beauty of it. Everybody's a potential customer, right? Everybody has laundry to do in their household, and it's just a matter of where are they going to do it, either at home or someplace else along the way. So it's probably, again, probably a low estimate of around 19 million people a week. But again, Alaa, I imagine you're like a lot of your peers where, for sure you're seeing people coming in that have a home washer but they're opting to come in and see you.
Um, in our demographic, you'll actually be surprised on
Okay.
how
Yeah.
little we see that actually.
Uh-huh.
And the reason for that is, as you mentioned, our stores are in extremely densely populated areas. So if somebody has a washer and dryer at home, they do not want to come in and compete with the crowd. And, in more rural areas where you don't have
Right.
that level of volume in the stores, people don't mind it because it's kind of relaxed. They can come in and do their laundry at a faster, at a much faster time than doing it at home, but they don't feel the pressure of fighting for parking and fighting for machines. So in my demographic, we don't see it as often as some of the other demographics for sure.
Yeah, no, and that's a great illustration of, no two stores are the same. And
100%.
we know that Allah's not going to complain about his stores being so busy that that people can't find their way in there. So I think that is terrific.
Which actually does, you asked me about the store size, and there's actually a good question in here that came from Andrea. But I wanted to just touch on one thing as far as the size before anything else. But one of the things that I have learned as well is always try to think 10 steps ahead. And what I mean by that is when you're looking at a size, understand that, laundromats are long-term projects, right? Most stores will be there for 30, 40, 50 years even in the same location. And that's why Brian will get into leasing and how many years minimums, and you'll see that the numbers are high. So plan 10 steps ahead. So if you find a location where maybe it's a little bigger than you thought, that's fine, right? Because hopefully the idea is that the area that you're in becomes more densely populated, you have more people moving in, you can now be prepared to easily add machines and expand your store to avoid competition going down the street because now your store is too crowded, customers can't find any machines on a Sunday, and guess what? Somebody now snatches up a property down the road, they build a much bigger store, all your customers go there because they can actually find machines. So think 10 steps ahead when it comes
Yeah.
to size.
Mhm.
Plan ahead, make sure you give yourself some breathing room. This way, you're not in a bad predicament 5 years from now.
No, excellent point. And let me get after Tiffany's first question, and then maybe allow you can take Andrea's question about building on a single building.
Sure.
But NAICS codes off the top of my head, the right NAICS code for us is 812-310,
Yep.
812-310. So someone in the chat, if I got that wrong, go ahead and put that in there. But I think that's the best class code for us. But again, as I think William alluded to, they often will, even in that specific 6-digit class code, include some of the apartment laundry folks and even in some cases dry cleaners. So Alaa, what do you say to Andrea? What better to build on a single building for your location or better to be in a shopping center setting? I guess it probably depends a lot on the market that you're in.
It does, and it's not a clear answer. There's no right or wrong. There are a lot of different variables that come into play. Number one, it's what kind. If it's look, single buildings, in my opinion, are always the best for a couple of reasons. Number one, you're not competing. Your parking spaces are not shared, right?
Right.
If you
Right.
have a single building that's on a property that also has ample parking, your customers are the only ones that are going to use that parking. They're also not impacted by high foot traffic or high traffic in general, especially during peak days like Saturday and Sunday, where people will most likely go do shopping, etc., which will then impact the flow of traffic in and out of your space. Um, so because of those specific items, and then also maintenance and things like that becomes a little bit easier, making sure that the parking lot is clean and lit. You can't really control what other customers from other stores do. Maybe people loiter outside different stores and then impact, the look and feel of your store. So in my opinion, if you can find a building that is standalone, but also in a highly residential area, which is really, really hard to find,
It
that's a
is.
no-brainer.
Mm-hmm.
Sometimes, like I said, they're hard to find, and so we're forced to go to either strip malls or even larger malls. Now, larger malls, and what I mean by larger strip malls, like malls that have Home Depots or Targets or Marshalls or ShopRites, um, those I would stay away from completely. And the reason for that is, you know, the nature of our business is that people are coming in with bags of clothes that tend to weigh 40 to 50 to maybe even 60 pounds. And so when you're walking an additional 20 to 30 feet, it's a big difference, right?
Right.
When you're just pulling up to run into a grocery store, you're empty-handed, you're walking out with a cart, it's a lot easier to do. When you're lugging 4 or 5 bags of clothes and you have to do it from all the way across the other side of the parking lot because all of the other big stores occupied all of the front rows, the customers are going to be unhappy. So those really large strip malls, I would try to stay away from them. Now, if it's a small strip mall with a few stores next to it, those aren't so bad because sometimes the parking is more than enough where kind of everybody stays in their own little spots that are directly in front of their stores. And so your customers are not going all the way across the parking lot to park. And interestingly enough, I actually have a store in Linden, New Jersey, and when I signed the lease on it, the way the store is, it's actually it's kind of weird. Is there's one really big strip or mall area which has a ShopRite, a Home Depot, every store that I just said not to do it in. Our spot is actually on a little side strip mall that's kind of adjacent to that one, with only like a liquor store next to us, a dental office. But when I gave the address to my contractor, he went and he was in the main parking lot and he called me and he said, "Are you really sure you want to do this location?" And he tried to talk me out of it. And we've been together for 15 years, so he always looks out for me. And I said, "Where are you exactly?" He said, "Oh, I'm right in front of the ShopRite." I said, "No, no, no. Our building is in another area, which is kind of tucked in the corner by itself, so you don't compete with all that traffic." And what we did find is there is one positive to that. And this is again where I say it's not a right or wrong answer. The main positive or the big positive of being somewhat close to some of these bigger stores is that people can do multiple things at once. So they could
Right.
come, put the clothes in the washer, run to ShopRite, buy something, come back. So there's always, kind of pluses and minuses, but I would say completely avoid really, really large kind of mall areas. Make sure that where you are is tucked away in a nice quiet area where people are not going to be competing with parking spaces. But obviously, single buildings to me are probably where you want to start looking.
Yeah. Yeah. Again, a little bit of a needle in the haystack, but if you're looking for the absolute ideal, I would certainly agree with that. So, okay, I think we're doing great, folks. We're about 30 minutes in. I see a bunch of questions populating in the Q&A box in the chat. I'm going to cover a couple more slides here, and then we'll definitely circle back to questions. Alaa, if you want to type in some answers, feel free
Sure.
as we go along the way, and I'll be keeping an eye on those as well. So this next section, again, I don't feel our job is to recruit you into the industry. There's a lot of hype about the business right now. Obviously, we love the industry, but we're not here dumping buckets of quarters or telling you that this is a passive business or that you're going to make $1 million overnight or that you can find a store in 30 days. That's not our mindset. So what I'd really like to do is just kind of give you the pros and cons and tell it like it is, right? So if you will kind of stick with me here, I'm going to kind of go through why laundromats, like why our members love the business, what are the things that attract them to the industry, but then I'm going to balance it off with what are some of the challenges, obstacles, pitfalls, and just try to give you kind of a level-headed look at the business. And as I said, we'll circle back on these questions as they come through. So people like our industry because it's essential. It's a basic level service. It's essential to the community. In that sort of regular, recurring, weekly business is something that has really done well by our members and something that our members really like about the business. This is one of these controversial notions. Is this recession proof? No. Is it recession resistant, meaning that we hold up better than most industries during downturns? I do believe that to be the case. And we had this really, obviously, tragic test with respect to the pandemic. But again, we were able to formally become essential in terms of being open for business and having that ability to stay open. And, obviously, it was a basic public health service, people being able to do their laundry. So, when we look at some of the things that people like about the industry, it comes down to this is a basic service. Everyone has dirty laundry, rain or shine. And when we do have big disruptions, like recessions or hopefully just once with this pandemic, we'd rather not do it again, but our industry kind of held its own and continue to do business when some others may have not been able to do so. This is in my estimation, I think it's fair to say this is a simple business, but that is nowhere near the same thing as easy. Simple. All right. So the keys to success are pretty self-evident, right? We've talked about location, right? We've talked about making it convenient for people with access from the parking lot and being able to get in and out with heavy loads of clothes. It's got to be meticulously clean. The machines need to run, right? You can't have all this downtime and out of order signs. You need to have friendly customer service. So it's simple in that we can identify those things, but not easy in the sense that a lot of people have trouble executing on these key points. And as you've done some homework in your own area, you probably find some of these stores, right, that are run down and not really looking great or operating that well. It's not because they didn't know what they needed to do. It's that they just weren't able to execute on some of these key points. So that straightforward simplicity, recurring, resilient nature of the business is what has attracted a lot of our members to it over time. And again, I tend to reject this notion of passive or absentee because I think that gets a little bit distorted. However, we have plenty of members that create systems and processes that help sort of limit the amount of time that they spend at the stores. Not everybody has 4 stores going on 5 like Alaa. We have people that have 1 store, and it can be sort of a part-time endeavor, if you will. But in terms of kind of showing up once a week to collect quarters, as you might see on Instagram or TikTok, that's just not the experience that I've seen with our members over time. And again, there are people that some of these rundown stores that you might see do have business, so they're doing some business in spite of themselves, but they're certainly not achieving all that they should, being run better. So it's that kind of flex time business or lifestyle considerations that I hear the most often from our members where, I love being able to drive the kids to school, or I love being able to coach a sports team, or I have another business or two, and the laundromat allows me to have the flexibility. In other words, it needs attention, but I have a little bit of flexibility in terms of when I spend that time over the course of the week. And of course, that's outside of, emergency situations or an employee doesn't show up or there's a mechanical issue that needs to be addressed right away. So that flexibility is certainly very attractive, to our people. I think another thing that I hear a lot from our members is that on your own, any of you on here today, when you do your first store, you can build a best-in-class store right out of the jump, right from the beginning. You can do your homework, you can make the investment, you can build a beautiful, well-marketed, well-operated store. You don't necessarily have to be part of a chain or a franchise in order to do that. And so as we stand here today, it's getting a little less fragmented, but again, almost by any measure, it's a very fragmented basis. And we have seen an uptick in the number of franchisors entering our space over the last couple of years. It's been really interesting. We have had a lot of members that have gone that route and wanted to look at something that's more of a sort of a prepackaged plan. And but even at that, If I took all the franchise locations, we're talking about 100 or maybe 200 stores out of a population of almost 30,000. So that may be changing over time, and that is a fairly new concept for us. But again, we have a lot of members that have just built great locations, and I think that's something to bear in mind. So what's the flip side of that? If the industry is great, it's recurring, it's regular, it's resilient, what are we talking about here? What are the challenges? What's the flip side to the coin? So, again, all small business opportunities present their own challenges. And as we talk some more with Alaa along the way here, I'm sure we'll touch on some other bumps in the road that naturally come through. But I want to start with this one because, again, I work with new investors every day and do a lot of consultations with our new members. And you might get lucky. You might find a great store for sale in the first week, and you make an offer, and it's a done deal, and you're in the business. Bam. That's not the typical of what I'm seeing these days. And I think other desirable locations to build new are also can be scarce. And so I think you have to sort of measure and manage your expectations with respect to how long is it going to take to find the right fit. It really depends on what market you're in and what's available. As I travel just about every single week around the country, I'm finding a real lack of inventory of stores for sale. And then you start to look at stores that might be desirable or priced right or have the right lease or have the right equipment. So just, kind of, manage your expectations with respect to scarcity, and just know that it may take a little bit of time to sort of get to that point. Another thing, and I may ask a lot to comment on this one, is that we love our customers. These tend to be community type businesses. A lot of operators, you get to know a lot of your customers on a first name basis. You see them every week, and it's really a wonderful part of the business. At the same time, you are open to the public. You're open to public in what can be sometimes challenging neighborhoods. And so I always like to just mention to people that when you're dealing with the public, yeah, you may come across folks that are impacted by homelessness, people that may be impacted by addiction, and just kind of the whole issue of just being open to the public. So I don't say that to dissuade you, but what I do like to recommend is that if you're serious about doing this business, one thing you could do is put 2 loads of laundry in your trunk, grab some towels, put them in your car, and as you drive around, stop and do laundry. Stop in 3 or 4 stores, stop in 5 or 6 stores. Better yet, stop in 9 or 10 or 12 stores, and it's going to do a couple things for you. One, you're going to get a really good sense of what you like and what you don't like, and help kind of hone your vision for what you want to do. If it's in your immediate area, you be in a position to start building a competitive analysis of the other stores in the market and start to inventory what else is out there. And as a practical matter, you're going to get a sense of just what the day-to-day looks like. So, Alaa, what would you say about, am I overstating this issue of kind of dealing with the general public, or I just think it's something that people need to keep in mind to make sure that kind of workplace is where they want to be.
Oh, absolutely. No, I don't think you're overstating it at all. And I think it's, when you hear the term passive income and things like that, you fail to realize that, you know, you're the business that we operate, laundromats, we have, sometimes up to 100 to 150 different people in the store at one time. And all those people have unique situations in their life. There are kids there, there are people on the street trying to come in. So without a doubt, you have to be aware that in the neighborhoods that we typically would open these laundromats come with their own set of challenges.
Right.
And so, yeah, no, you have to be prepared. And to me, I think that one big piece of advice, I have one of my locations in particular, which is probably in one of the worst areas in New Jersey, and I know that there's somebody in here from North Jersey, and I'm sure they know one of my locations is in Paterson, New Jersey, which has one of the highest rates of drug addiction, especially with crack and stuff like that. And so We have a lot of people that come in that are clearly high. We've had, some really bad situations. Brian, I actually have it on footage of a woman who was clearly very high, came in with absolutely no clothes on at all, nothing. And the reason why she came in was because she was trying to open up the machines and steal some clothes to just cover herself.
Right. Right.
And so those are the things that we deal with. And so one of the things that I will tell you is um, take every situation, on a case by case basis.
Right.
Have a little compassion with these people. They are in some
Mhm.
tough situations. Be a part of the community. You
Right.
don't want to have that store that's just kicking people out and arguing and yelling and screaming and calling the cops every time. Find a creative way to touch your community, to reach your community. Understand that these people's situations sometimes is not by choice,
Right.
and really try to help them out. At the same time, don't let people take advantage of you. Don't let people take advantage of your stores. If you build something great with AC and TVs, sometimes you'll have some people who want to come in there and loiter. So take it by case, but really just put compassion and sympathy at the forefront of your decision making on how to deal with it. But be
Yeah.
prepared to deal with it.
Yeah. Yeah. No, very well said. And again, we're just trying to tell you like it is. And again, Alaa's a great example. And we'll talk some more about that later of really embracing the community and doing right by the community and building some tremendous relationships. But again, it takes a little bit of fortitude to do that. So the other challenge that I wanted to speak to here is really related to the number one issue that I run into talking with our members that are new every single day for decades is quite often it's that initial investment, right? Trying to make that first store purchase or that first store build. And so again, maybe you're sitting here watching this and you've got a strong balance sheet and you're ready to pay cash and you're good to go. More likely, it's often your first small business, and you're going to have to put some effort into pulling together the resources that are required. So I don't want to tell you that that's the number one issue I come across and then not give you any context for that. So I'm going to, knowing that there's a million variables and a lot of different situations out there, I'm going to try to give you some basic parameters to take a look at in terms of where you need to be. So, when laundromats for sale, that's a little bit more accessible, right? You see a store, it's listed for a certain dollar amount, and you think about it from that point of view. And we're going to talk about financing a bit more in a few minutes, but typically that's a 30 to 40% cash requirement if you're looking to acquire an existing laundromat. I suppose it could be less, not likely to be more, but just give you some sense of where you need to be in terms of cash resources if you're looking to buy an existing store. Now, building out a new location, like Alaa's about to do, is very, very challenging to get an exact estimate. And really, anything short of a real bid, a real quote on a real project is really just a guess. But I think from a shorthand standpoint, if we're going to talk about an existing space, right? So we're not talking about acquiring the real estate, we're talking about leasing the space. And we're trying to convert that space, either it's a vanilla box that are empty, or maybe it's being used for another purpose, converting that into a laundromat, meaning the leasehold improvements, tenant improvements, utilities, carpentry, the build out, the equipment itself, and the installation of the equipment. I think if you start at $300 to $400 per square foot, that starts to give you a pretty good starting point as to what those costs are going to be. Now, I'm guessing a lot sitting there and saying, I'd love to be able to do a store for $300 or $400 a square foot.
Oh, yes.
Um, it's probably not the price quote in North Jersey. So,
No.
but I do want to give you the sense that if you tie this back to that average I gave you on the first slide about say 2,850 square feet, yeah, most new stores now are in excess of $1 million, and you're probably going to need again something along the lines of a 30% or perhaps a bit more in cash in order to do that. So. There are parts of the country where you can do less than $300. There's certainly plenty of parts of the country where you routinely see $500 a foot or even $600 a foot. So you really need to do your homework on it. But again, I wanted to give you just some rough range because unfortunately I hear from a lot of folks, and again, this is fed a little bit by social media where people say, I've got $50,000. Why can't I do a store? And I just want to kind of help people calibrate what some of those requirements are. So in summary, people love the business. They love the convenience. They love the profitability. They love the recurring nature of the business. They like the flexibility. The challenges relate to trying to find locations to buy, find locations to build on, and then for first timers, coming up with the initial cash investment, can be a bit challenging. So I'm going to get into the valuation here in just a moment, but I am going to do a quick scan. I know Alaa's been answering some questions in the Q&A box. I want to make sure that I'm taking a quick look at some of the questions to make sure that we're staying up to date. You know, so yeah, Tiffany's asking 120,000 to start. Would that be okay? So again, that in my mind, just in quick math, would be that if you see a store listed for 350,000, yeah, your 120 is probably going to get you there, right? All things being equal. Now, of course, a lot of times when you buy a store in a case like you're describing, there may be needs that the store has, and it may be low dollar needs like a fresh coat of paint and clean up the floor or replace some ceiling tiles, or it may need a whole new store full of equipment because the equipment's junk. And all of a sudden your, say $350,000 store doubles in cost when you need to, or triples in cost when you need to re-equip the place. So we'll talk a little bit about that as we go, but just in terms of basic math, Tiffany, that certainly does make sense. Joy was asking about the NAICS codes. I came up with 812310. 812310 is the class code for self-service laundromats. Let's see here. Troy, you had a question about wash, dry, fold delivery as part of the business. So yeah, it's a good time to talk about that just because I don't think I've got a separate slide on that. Wash, dry, fold, I would define as drop off. People coming in to drop off their laundry, your team wash, dry, fold, return it back. You're charging on a per pound basis, and that is the transaction. Delivery, wash, dry, fold delivery, obviously that's when you're going out, your team is going out to pick up the laundry, bring it back to the laundromat to process and return to the customer. That part of our industry is growing rapidly, is gaining in popularity. We have a lot of members that are really focusing on that part of the business. And it's really been pretty amazing to the point where, as I'll mention a little bit later, we've even created an event, a wash, dry, fold conference just to focus on that. We've got other members where it's just not part of their model, right? They're trying to keep it a little bit more streamlined. They're really focused on self-service laundry, and they're not getting into that part of it. So part of your question, Troy, is how far can you drive and still be profitable? It really depends on the market that you're in. I would say that most people that have had experience with delivery would tell you to be disciplined and try to stay in a fairly tight radius to begin with, knowing that you could always expand out as opposed to overstretching and hurting your sort of your expense basis if you're going out too far, particularly if you're too scattered and picking up stray loads here and there, as opposed to having a neighborhood where you can concentrate some business. Timeline for return, I would say that most drop-off laundry gets returned in 24 hours, maybe 48 hours. I would say that a lot of times on delivery, it's more of a 48-hour turnaround. So it's really something that you're dictating and something that really has to match with what the customer demand might look like. You're asking about good price point for wash, dry, fold. It's a good time to mention that CLA has a great benchmarking survey every year available to its members. We have all the statistics on it. Off the top of my head, I think the drop-off coming into the store is around national average around $1.70 a pound. I'd say we've got plenty of members that are higher than that, $2 a pound or even more than that. And with respect to delivery, that's where you tend to see prices that are a bit higher, of course, because you've got to build in for the cost of delivery. You might see anything between, again, $2 to, to $2.49, $2.99. It really depends on the market and what your cost basis is going to be for doing that. So that's about this much of what you need to know about wash, dry, fold, and delivery. Good time to plug our YouTube channel for CLA, the Laundry Association. I was just looking at that this morning. We've got tons and tons of video, including seminars from our conference about wash, dry, fold. So please take advantage of that as another resource. Kiba, if you give me just a second, I'll get into financing and answer your question about terms on loans. And let me take a quick peek back over to the chat. Valuing the machines, is there a similar comparison with property inspectors and real estate you can hire to assess the value and functionality? So we'll talk about that, Jessica, a little bit more when it comes to valuation. But yeah, if you're buying an existing store, part of your process ought to be having someone that knows what they're doing take a look at the equipment, not just to sort of verify the age, but also the condition. And I would not necessarily be looking at the value of those machines necessarily in the context, as we're going to talk in a minute here, about the value of the store, but more in the context of what is the replacement cost going to look like. So whether that is immediate or in 2 years or 5 years or even 10 years, the sooner you better, understand what the equipment costs look like, the more you can sort of assess the project. So I would look at it from that basis. So let me jump into this slide on valuation. And as I'm sure Alaa will attest, we could spend 3 hours just talking about valuations, but we're going to pick up the pace here as we about to close out on our second half hour here. We want to make sure that we get through everything. So again, more art than science. And the way I would do this, and I'll give Alaa a chance to respond at the end here, just based on what his experience has been as a buyer and a seller. Historically, most laundromats sell as a multiple of the net income. That would be, in my mind, a net operating income. In other words, their top line sales less the operating expenses, and coming up with a net, and then taking an annual multiple of that. Again, historically, that would be 3 to 5 times the net. And today's market, generally speaking, is a little bit more robust. There's a little bit higher demand for stores, as evidence of so many of you on our call this month. And especially for the larger volume stores or higher performers, you're going to see that. So, but even 3 to 5 is a pretty big range. So let's talk a minute about what drives those considerations higher or lower. And again, there's plenty of stores that sell for more and plenty that sell for less. But the couple of things that I think come into play, one is net income, in the sense that higher volume stores, higher net stores, larger stores tend to command higher multipliers and be simply in more demand. But probably more directly is the impact of the age and condition of equipment and the terms and duration of the lease. So you can't pick up and move a laundromat, folks, right? So that at least that would be very challenging, especially for a newbie. So the lease becomes very important, not just in understanding the cost structure, but how much time do you have as the new owner of this business to continue to operate. So if you imagine there's a cash flow that you're buying that's protected by a lease for a finite period of time. And so understanding that is very important, and it greatly informs the value of the business, right? The big difference between a store that has a lease with 5 years remaining and a store with a lease with 15 years remaining, right? In terms of your ability to expect that cash flow to continue, not just for yourself, but someone that you may sell the store to down the road. And as I alluded to a moment ago, the age and condition of the equipment. So equipment is a big capital expense. So there's a big difference between a store that has, again, 5-year-old equipment and a store that has 15 or 20-year-old equipment, because it's going to impact what your ongoing costs are going to be. And so maybe the shorthand, the way to look at this is, the longer the lease, the newer the equipment, the more the store is worth. The shorter the lease, the older the equipment, the less the store is worth. So there's a lot of other factors, but that would be sort of focused in on the main considerations there. Due diligence is challenging. You're buying a cash business. And we have a lot of resources on that, by the way. We've got great resource guides, white papers, videos that tackle these topics. And another factor for store value is what's going on around in the market, right? Did a brand new store get opened across the street and that's why that existing store is for sale, or is the market more or less wide open? So anything there, Alaa, that you would want to either dispute or add to when it comes to valuation before we move on to another topic?
Yes, just wanted to add.
Uh-huh.
Yes, 2 points. So definitely, Brian, what you said was, extremely accurate. The valuation of the machines, the existing machines, should not be done to negotiate or to determine the price of the laundromat itself. That's determined by pretty much how much money it does. But it should be taken into consideration. And to answer the question, you can hire distributors, so you can find local distributors that sell machines in your area, or you can hire service techs. You can find people that maintain and service these machines, and they could come. And because what you're looking for, exactly what Brian said, is you want to know, if I'm going to spend $350,000 on a store, but 6 months down the line, I'm going to look at replacing the machines for $800,000. Does this now transaction make sense to me? So those service techs or the distributors will be able to come, identify the year that they were manufactured based on the serial number, but they could also kind of get a good feel for, were these machines maintained properly? Were they fixed properly? Is there rust on the frame? How is the water connected? Is the drainage proper? Is the ventilation for the dryers done correctly? And based on that, you could determine, was this store built the right way? And so
Right.
have these machines been working extra hard, or have they been working the normal cycle that they should? And then that'll kind of give you an idea. So definitely, I highly recommend getting a service tech or a distributor to come in there. Probably a service tech is better. A distributor may want to sell you on new machines, so they may be a little biased. But try to get somebody, with some experience servicing these machines to kind of give you an idea of how they look from the inside. As far as valuation, this is something that I just want to bring up to this group, as I see there's a lot of enthusiasm. I see a lot in the chat. I see people are really, really looking to get into this industry. And obviously, I've been seeing this trend for quite some time. And I always I have these conversations a lot with people who call me looking to get into the industry. And I tell them, look, the laundromat business is just like any other business. And it's exactly, if any of you do any kind of stock trading or crypto trading, there are two things that raise the value of a stock. Typically, there's a little bit more than two things, but typically it's two things, right? It's how well has a company performed, meaning when you look at their books, how much profit, how much growth have they had, and depending on that, if there's more profit, if there's more growth, people will tend to invest in those companies, which then drives up the cost of the share price. But sometimes it's purely just on hype, right? Just on something that happened in the news, right? So, for example, you look at a company that its sales have not gone up, its volume, its net revenue has not gone up, but simply because they were featured in a commercial or something happened, some controversy even happened, all of a sudden everybody is hearing about this company and everybody now wants to invest in that company. And so all of a sudden you see this 300% rise in stock, not because they did anything different or made more business or produced more products, but simply because they got a lot of hype. And I definitely feel that the laundromat industry is in that space right now. Because of the pandemic, people are looking for a safe place to put their money. And yes, we are, as Brian mentioned, we're not recession proof, we're recession resistant. We are in an industry that, regardless of economic conditions, people have to wash their clothes. And because of that, we are a safe bet. We're a place where investors could put millions, thousands of dollars and get a good return with, minimal disruption. And because of that, our stock price has gone up tremendously. And so one piece of advice for you guys when you're evaluating these stores, do not make an emotional decision. Make a calculated decision. Look at the numbers. Do your due diligence. Make sure that the numbers that these people are saying is accurate. Spend time. Do your due diligence and spend time. In your contract, make sure that you have a minimum of a 3-week due diligence period. And the reason why I say 3 weeks is the laundromat industry is cyclical. You'll have one good week, one bad week, one good week, one bad week. So make sure that you're seeing the volume of the store over a 3-week period. Stay in that store for hours as part of your due diligence. Count how many people are there. Look at a machine and count how many times that machine is running throughout the day. This is your money, right? It's a lot of, I'm sure this is all your life savings. So spend some time, do the due diligence. It is a great industry. It is a great business. It's one that will bring you profit if you're in a good location. But if you overpay, you will not be in a good position. So definitely take that into consideration when you're evaluating these locations.
No, thank you for that, Alaa. That comes from real life experience. We've all made mistakes along the way, and part of our job here is to help you identify some of those pitfalls before you get there. So we are right now at our 1 hour mark. I told you it would go fast, so we got about 30 minutes to go. So I'm going to get through a couple of these basic topics, and then we're going to reserve a bunch of time at the end to make sure we get through all these questions. And as we have an opportunity, we'll answer some in the chat or in the Q&A box. But let me kind of walk us through a few more things that I wanted to share with you in terms of prepared material. So financing. There's lots of questions that I was holding off on in the chat about financing. So I alluded to this a little bit earlier, but let's take a little bit deeper dive when it comes to financing. Again, some of you may be experienced in business, have a strong balance sheet, and you're ready to rock. Most that we work with here are going to have to get a little bit creative and seek out financing and maybe even some creative financing to make the project come together. So let me walk you through what I see most often as the common options that come forward. Yes, you can go to a conventional bank. If you've got an existing business relationship, obviously that's better. You may find a bank that does have a great SBA person on their team that is really adept at navigating through the SBA process. Generally speaking, the SBA likes laundromats. They've done plenty of laundromats. They've got a good track record with them. But again, it starts with that local bank who's looking to have a loan guaranteed via the SBA. But let's be honest, a lot of conventional banks aren't interested in small business lending. They're not interested in lending to people that don't yet have experience in the business for which they're looking to access a loan. And so another option that has come up in our industry certainly over the last 25 years is what I would call captive lending or industry-specific lenders. So a very large portion of the deals that I see our members doing are coming through we'll call laundromat lenders, just for the sake of ease here. So these are people that all they do is equipment loans and project loans for the laundromat industry. So they're either owned and operated by one of the equipment manufacturers, or there's a couple of independent lenders that specialize in laundromats that have close relationships within the business. And this sort of ecosystem of funding within the industry kind of came together because conventional lending was not providing enough capital and enough access to credit to make our industry happen. So on the one hand, they'd love to sell you some equipment. As Alaa said earlier, they'd love to get you in the business. On the other hand, they don't like to make loans that fail, and they have experience when it comes to evaluating locations, evaluating acquisition opportunities, and can be a partner for you in that process. So I would say certainly the plurality, if not the majority, of the deals that I see are coming through one of those captives. And a good chance for me to, and maybe Andrew could put this in the chat, we do have a directory on our website of all these distributors based on your area that are CLA members. We also have a directory that includes the washer manufacturers, the payment system folks, and yes, we have a section for the finance companies and lenders. So take advantage of looking at our directory at laundryassociation.org as another good resource for you to tap into. So back on the common options for funding, particularly in social media, I see a ton of reference to seller financing, using other people's money, zero down. Honestly, I don't see a whole lot of that in real life. Seller financing, I see to be highly limited these days. It used to be a prominent resource, a couple decades ago. But in terms of finding sellers that are wanting to carry paper on that sale to be the bank, I just don't see quite often nowadays. Now there's sometimes there's a distressed property, or there's a situation where there's a lack of record keeping, or the due diligence is particularly difficult. I can see sometimes I see seller financing pop up in some of those contexts, but I wouldn't view that as a likely opportunity that you have. And of course, it's going to come down to what you have to bring to the table, right? Your own personal savings, equity that you've got, business partners. These are all common things that you see together. So a lot of projects, especially first time, there'll be some combination of things coming together in order to make that first project happen. So we have a great white paper resource guide on financing. We've got videos, we've got other resources through CLA that can help you learn a little bit more about financing. So this next section, I'm pulling directly from our CLA industry survey that we do every single year. And I'm sharing this, and again, you'll get a copy of this as having registered, but just giving you some things to look at to frame up the at least the operating expense side of the picture. When Alaa was talking about due diligence on a cash business, it's absolutely right. You have to check things out. And yes, some people may tend to inflate or overstate what the income is. But let's not forget that we're really basing our valuation on the net. So you could argue that verifying expenses is just as important as verifying income, right? And yes, a lot of the deal sheets that I see shared to me with members, I think tend to underestimate the expenses. So let's see just what the facts say. Just what are the expense ratios? So for utilities, which is often the top expense for a store, you'll find that 20% is the industry average, and that we are looking at that as an expense ratio. So taking your water, sewer, gas, and electric, divide it into your gross sales, you're going to get a percentage. And so the average these days is 20. Now, you may be in a market that has higher rates, and you'll be higher than 20. You may be looking at an existing store with old equipment, and you say, Brian, it's 30% or 32% or 35%. Well, it very well may be with old machines in there. The flip side of that is if it's been a recently re-equipped store or brand new store, you may see it under 20%. So, but I at least wanted to give you some sense of what's happening with the percentages. Now, rent. Rent can be all over the board. I'm telling you that the statistical average is just under 24% of gross income. I would say that most people are targeting, again, 20% is probably where they want to be if they can find the total cost of a lease to be in that range, again, as a percentage of gross sales. When it comes to payroll, again, a lot of differences out there, minimum wage, rates are different as you go along. So the statistical average has been right around 22% and a target of 15 to 20% for most operators. So Alaa, when I talk about 20% on utilities, about 24% on rent, and about 22% on payroll based on the national surveys, I know that a lot of our members tend to outperform those percentages. So is there any of these that strike you as right on the money, or conversely, any of these that strike you as way off?
No, they're all spot on, and you're absolutely right. I mean, I think these are kind of target benchmarks. Doesn't mean that you can do better. You definitely should not be doing worse.
Right.
Yeah, no, I mean, I have some stores that the utilities are somewhere around 9%.
Yeah.
And that all depends on what the utility costs are in typical area in certain areas. But yeah, no, I try to definitely stay within these benchmarks. They are absolutely spot on.
Okay. I feel good to hear that. I always like to check that with the experts. So I want to share that. And then again, this is just what the surveys tell us about the profitability. Does this mean you're going to open a store and do 335,000? No. But this does tie back to the 2,850 square foot store that we talked about on the first slide, right? So you could look at it another way and looking at whatever that is, 110 or $120 a square foot as a piece of framework. So, but just wanted to give you again what the survey tells us about where the gross revenue looks like. More importantly, I think for most, is what's the net? What's the net? What's the net? So again, according to our last year's survey, the mean was around 25%, the median a bit higher at 27%, because again, we do definitely have some higher performers among our members. So is that guaranteed? No. But when you're looking at existing stores, these are some things that you'd like to have in your hip pocket about where that tends to go for stores these days. Now, I also put in some of the data from the industry revenue growth, top line revenue, which I'm taking right out of that same, was it 335,000 from the last slide, and charted that over the last 5 years. And we're about to have our 2024 numbers ready to publish here soon. So you see that, and if I look back further, I saw a lot of this 5, 6, 7% growth year over year. 2023, I think, took a big jump because we're sort of, getting out of COVID, and there was a bump in the action. You can see in 2020, in the teeth of COVID, even though we were able to stay open for business, we did see a drop in sales. But again, as I said, we really outperform most other industries that are out there. So again, these are just some insights I wanted to share with you. Um, I won't read this back to you, but this is probably the most common question that I come across is, should I buy or should I build? I think to a large extent, it has to do with your financial wherewithal, but even more so, I think it has to do with, again, back to this inventory and, what's available, what can you find? And, it shouldn't be a surprise that it's really depends, right? It depends on each of these things. So this is really just a kind of a shortcut. The pros of buying is that, it's a known entity. You can touch it, feel it, see it. It should be cash flowing on day one. The flip of that is that, you're inheriting issues. Perhaps it may have older equipment. It may be on a shorter lease. It's challenging for due diligence. On new builds, hey, who doesn't love new? New is bright, new, exciting, the latest and greatest, the technology, it's your baby, it's your vision. The flip of that is that it tends to be a lot more money to do that. And by definition is a yet to be proven location. So I tell people to judge each opportunity on its own merits, whether it's to buy or build. What do you say?
I would say to make that decision, it depends on how much you like pain. My
Pain.
wife my wife always tells me that she would if she can go back and do it all over again, she would say that whenever I opened a new location, that she would leave me and move somewhere else for at least 2 years because those first 2 years with a new location are the most stressful 2 years that you will have to endure because, as Brian said, look, it's a new location. And one thing so somebody told me this a long time ago, which is when I had hair and I used to go to the barber shop, it's true. When you go to a barber shop, and if you're, a woman that goes to a hair salon or whatever, you kind of you want to have the same person cutting your hair. You want to go at the same hour. You want to sit in the same seat. There's a routine. And it's the same for laundromats. People want to come into the same location, wash in the same machines, same time. So to get people to leave that routine and come to you takes a bit of work and time. So for the first 2 years, Imagine you just finished a build on a laundromat that costed you $2 million and your rent is due, your loan payments are due, and you haven't gotten the volume to even break even. So even after spending $2 million, you're finding that you're coming in out of your pocket for an additional $10,000, $20,000 a month just to stay afloat. And that will last for probably a good 2 years. If you're lucky, you'll get it down, break even a little bit less. But yeah, typically the first 2 years are very stressful. Now, as Brian said, but the in return to that is you have a brand new store built in a way that you know is correct and that these machines are going to last, and you have brand new machines. And so after you've gotten over that 2 year hurdle, you know that you have a very long road ahead of enjoying the fruits of your labor. So for me, out of my 12 stores, every single one of them was built from the ground up. And and I guess I am a person that likes to put myself through pain. But would I do it any differently? Probably not. I also have a very particular personality about, how I want my space to look and feel. And I know that if I bought an existing store, I'll probably end up tearing it down and rebuilding it anyway. So it all depends on what your tolerance is, what your risk tolerance is, what your
Right.
tolerance for space and aesthetics and design, etc. And make that decision. Definitely, though, I think for newcomers, it might be nice to kind of get your feet wet with an existing store, as long as that you evaluate it properly and make sure that the numbers that they're stating are actual. Might be an easy way to kind of get in, get your feet wet without a lot of risk. And you may come into it and say, this is the worst industry in the world. I don't ever want to do this again. And you just turn around, flip that store, sell it, and you walk away. So for newbies, I would say, find a good store that's performing well, get in, get your feet wet, and then make a decision from there.
Yeah, that's super helpful. And by the way, folks, Alaa has answered a ton of questions in the Q&A box, so you can look under the answered questions and see some of his responses to the other folks. So Alaa, thank you for taking the time to do that. We've got about 10 minutes to go, so last call for questions. We'll do our best here to get through the rest of those. I'm going to just hammer on leases just one more time because leases are so important that we really want to make sure that we hit on that properly. And Alaa, I see that you did answer a number of questions on leases in that Q&A box. But again, you can't pick up and move. Your lease is your business. It's not an overstatement. Your lease is your business. And so, yes, you want to get into the fine print. You most absolutely want to have an attorney review it. Certainly someone who's familiar with commercial real estate. If they're not, give them the CLA white paper on leases. Make sure that they're looking at the things that are laundromat industry specific, or better yet, find somebody locally who can review that for you further. Remember that the rent needs to be spelled out for the duration. In other words, if you have options or years later in that lease that do not spell out either what the escalations are or what the rent will be, I don't count that time, because sometimes I see these things that say, well, we'll negotiate at market rent 10 years from now. That's, to me, that's like not having the additional time. So what I see often is that on the ideal situation, I see that Alaa put 20 years in the chat. I'd say most of our members would say, give me 10 years plus 2 or 3 5-year options for a total of 20 to 25. That is sort of the ask. Now, some landlords will laugh you right out of the room. They're like, what are you talking about? They're used to doing other types of retail businesses that are looking for 3 years and 5 years and shorter terms. But we really need to hold to those longer leases, and that does sort of further narrow what's available to us from that perspective. Now, in the context of buying an existing store, a lot of these listings will either omit how much time is left on the lease, or kind of present it as a contingency. Can you negotiate more? Everyone will argue this point. I say a minimum of 10 years remaining to make it viable for a purchase. Again, be better to be longer than that. And let's face it, a lot of the finance terms, they're not going to give you a 8-year loan if there's 7 years left on a lease, right? That you need to be able to be guaranteed to be in business beyond that time. So, 20 to 25 years is sort of the ideal situation. You start to get to 10, and it really gets to be difficult to make it all pencil out and give you enough time to service your debt and enjoy it from there. Anything I missed on leases that you wanted to add, Alaa?
No, nothing you missed. I just did want to, this is something from experience. When you're looking at a new location, if it's an existing location, one of the things that I highly recommend before signing a contract or getting into it is meet the landlord. Ask the seller to schedule a meeting or a sit down with the landlord. And the reason why I say that is if the landlord happens to be kind of, a small type real estate investor that that owns one or two buildings in the area, there's a risk there, right? That risk is when that lease runs out, he may say, I want a laundromat there, right? Because I only have two buildings that I lease currently, and you know what, I can handle. Now, if they're a big property owner that have several hundred locations, rest assured that they're not in the business of laundromats, that they're going to continue to be in the business of owning real estate. And so when your lease is up for renewal, they're going to want to renew it because that's the business they want to stay in. So meet the landlord, get an idea of how big they are or how small they are, get an idea of their personality when it's time to renew the lease. Are they going to, price gouge you and raise the rent by, 20, 30%? So definitely set up a meeting. It really helps to understand what to expect in the future once that lease runs out.
Yeah, no, I think that's very true. And, kind of the sooner you know what the appetite of the landlord is for going long, the sooner you can start to make decisions, right? And I was just working with an existing member here recently, Alaa, who, they've talked to the landlord. He really doesn't seem to be willing to go beyond, they're down to 8 or 9 years remaining. And, the conversation we had was, you got to sell. If you don't think you can add time. And it's one of those things from the seller's perspective or the existing operator's perspective, sort of the longer they hold on, the lease gets shorter and the equipment gets older. And then by our discussion today, that valuation goes down. So these are really important things to stay on top of. So let's talk about some of the other resources. We'll kind of do a last call here, try to scan for a couple remaining questions, but this is the part where I like to say you don't have to go it alone. There's an association out there, meaning us at CLA. There are resources online. We've got videos. There's really no excuse not to put your hands on everything. And one of the things I like to say about CLA for beginners is, get your bachelor's degree in laundromats. Get your undergrad in laundromats, go through the white papers, review the videos, do a one-on-one consultation with us. Really make sure that you've got your footing beneath you, and then you can start to learn more. So those are just a couple of resources. We do have our in-person education. I think Carrie said that she signed up for Chicago here week after next. This is a deep dive where we have experts like Alaa, other board members that will be here to give you the peer-to-peer education, and basically we'll essentially do 1-hour sessions on all these key topics that we just talked about. So it's still time to register for our event in Chicago. You can go to laundryassociation.org and get some more details about the schedule. One thing I'll say to kind of whet your appetite is that the evening before these events, we do a very exciting field trip. We always go see a laundromat together. We get on a bus. Yes, believe it or not, we get on a bus, go see a laundromat, and do a walkthrough, meet the owner, get you into that environment, rub elbows with some experienced laundry folks that can kind of help you understand what you're seeing. So then we'll spend some social time together and then the full day session. So, take advantage of what's out there for you. I often say, spend a few $100s before you spend a few $100,000. Make sure that you've got everything available to you. Clean show, Alaa. What do you think? Should people go to the clean show or not?
If you are looking to get into the industry, you have to go to the clean show. That's not even a question. It is, number one, it will light a fire under you so fast that, it's amazing to be in the same space with thousands of people that are in the industry to see. I mean, I was like a little kid in a toy store. I wanted to buy every single piece of equipment that people were showing. It's amazing. It's great. I mean, it really is. And it's a great experience. It really is. It's worth it. You guys will learn a lot. You'll see a lot of the new technology that's coming out. You'll be able to have access to people like myself and people with even much more experience and who know a lot more about the industry than myself there. And you can talk to them, and everybody's very friendly and very open. So 100%, it is a must if you are trying to go into this industry.
Awesome. Well, thank you for that. I had a feeling you'd say something like that. But yeah, we'll be doing educational sessions. We'll be doing social events to get to know people. We're doing a bus tour. We haven't done this in many years, Alaa. We're all going to get on a bus the day before and go see 4 or 5 of the best stores in the Orlando market. So a lot of
I
fun,
love it.
and we're going to learn a lot along the way. I mentioned earlier that we have an annual now wash, dry, fold workshop. And so if you're looking to buy a store that has wash, dry, fold and or delivery, or you want this to be part of your approach, just know that we've got a conference just for you. It's our fastest growing conference. We had 300 plus people with us last year in Nashville. And so we're going to do it again this year. Lots to learn. Again, peer-to-peer education, people telling it like it is. And that's another opportunity for you to learn more about the business.
One thing Brian is not mentioning is that there's something weird and unique about the laundromat industry in that people in it love to have fun. So these workshops are not only great for, gaining good knowledge and experience, but if you're looking to just, get a little bit of a break and step out and meet some really fun people and great conversation and a great time, this is the place to be.
Awesome. Well, thank you. That is absolutely true, and it's a very open group. Hopefully you found us on Facebook already. We have the Laundromat Professionals Network that you can be a member of. I see some of you have requested admission while we're over the course of this webinar today. We have a lot of great resources to keep in mind, whether it's insurance, natural gas, and electricity contracts, marketing. What we try to do is our strength in numbers is to help you find great resources that you can use to help you operate your business. So please take advantage of that. And hopefully this doesn't dissuade you. But if you join the association, one of the first things you get is a link to my calendar to book some time, right? And so while we cast a wide net here and answered a lot of questions, just understand that if you become a member, you're going to gain access to me. I've got a lot of great friends in the business like Alaa. I make a lot of referrals and introductions. And so just understand that becoming a member really is going to not only help your education, but start to plug you in, start building your laundromat network. And we'd love for you to become a member and take the next couple of steps. The first year membership is $599. We are discounting that by $100 because you've taken the time to be with us today. Invest in yourself, invest in your future business. We'd love to have you as a member, and just understand that we've got the best in education, networking, advocacy, and of course, the business services that I mentioned. And Alaa, I think you've been a member since day one.
Absolutely.
So we appreciate that. We've got a lot of great alumni. So with that, we'll say thank you. Alaa, I know I speak for everybody. I see it in the chat. Thank you so much for taking your personal time to educate these folks. I know that they greatly appreciate it, telling it like it is from your real life experience. And we're really fortunate to have you as part of the CLA family. So thanks again, my friend.
Thank you, Brian, and thank you, everyone. And I wish everyone, the best of luck in this endeavor, and hopefully a lot of success. And Brian, thank you again. It's been an honor to be a part of this. I really appreciate it.
Really is our pleasure. And I'm looking in here. Mai, you're welcome. Sarah, you're welcome. Michelle, you're welcome. Valerie, you're welcome. Tiffany, you're welcome. Bruce, Jim, thank you all for joining us. And we look forward to seeing you next time when we do this again, and let us know how we can help you along the way.
Thanks,
Take
everyone.
care. Thanks a lot.